Starting up, we have Tom Revy, Managing Director, BlackEarth Minerals.
Good morning, ladies and gentlemen, and thanks again to Bill and the PayDirt team for hosting yet another Africa Down Under. So thanks very much for the opportunity to speak today. BlackEarth Minerals, ASX code BEM, was listed just over 3 years ago with a clear vision to effectively become a material player in the global graphite supply chain. Not to just be a humble miner, but rather be in a position to realise a much higher margins for shareholders by producing value-added product or products over time. Today we have two pillars of growth on our pathway to cash flow. The first is our MANIRY graphite project located in the south of Madagascar. We've demonstrated that we not only have quality and quantity of material, but that we also have high demand, high value products that can be produced from the project, a project currently in DFS and planned to be in production by 2023. The second pillar relates to our downstream ambitions to be the first ASX listed producer of expandable graphite and to be in cash flow this time next year. A formal joint venture is on track to be signed shortly with our Indian partners Medichem. The market continues to be driven by a short supply of suitable graphite. On top of that, we also have a legally binding offtake arrangement already in place with a long-established Tier 1 user, GRAPHITE Bergbau out of Austria. Market conditions are demonstrating end users' concerns about security of supply, particularly in the coarse fraction area, which has seen a decrease in global supply in recent years. Our market capitalisation is around $30 million, and whether shareholders came in a month ago or a year ago, they've seen a reasonable return. And yet, for all our activities to date and a clear pathway to cash flow, BlackEarth has only an enterprise value of about $24 million. And I say only because compared to many of our peers at a similar stage of development, and indeed based on a very recent piece of research by Argonaut Capital, BlackEarth's around half of what it should be at this very point in time. In terms of the MANIRY project itself, it's basically located here in the southern part of Madagascar. We have two projects, Ianapera to the north, and the most southern one is the MANIRY project itself. So why Madagascar, you may ask? Well, every year the Mining Journal publishes its World Risk Report ranking countries in terms of investment risk. And every year, Madagascar sits near the top of that list of major producing countries. End users are as comfortable today as they have been for the last 100 years buying high-quality graphite concentrate from Madagascar. This point is reinforced by the fact that over the last 12 months and even beyond that, Madagascar has been a key supplier of graphite concentrate into China, India, and the US. It continues to be one of the very few locations left in the world producing a sizable quantity of high-value coarse flake graphite, and that's why we're in Madagascar. Our project area is some 7 kilometres by 3.5 kilometres, with the green areas on the map showing the outline of outcropping graphite mineralisation. You can literally walk from north to south over that 7 kilometres and kick nothing but graphitic rocks as you walk through that area. The centre circle shows our current Razafy resource, which provides us with a mine life based on indicated resource only in excess of 10 years. A granted 40-year mining lease already sits over our Razafy resource, which will be the focus of some infill drilling shortly. The area itself is easy to explore, and with an exploration target of some 260 to 380 million tonnes at 6 to 8% total graphitic carbon, there's no shortage of material sitting here from surface. It's not just a graphite area or project, this is truly a graphite domain, and we own 100% of it. The northern circle represents our Razafy Northwest area, an area we announced some spectacular results last week, and I'll touch on these results and the implications shortly. The study outcomes demonstrate that the MANIRY project is both technically and financially attractive and robust. It shows that an NPV of US $103 million and an IRR of 42% can be achieved for a low capital investment of around $40 million, a capex which is infinitely achievable for a junior developer. The list on the right-hand side shows our current project enhancement activities, which I won't go through each and every one of. However, it has a strong focus on the two key elements from our point of view, and that's grade and product pricing. Both of those aspects we are in full control of. While our current resource grade is about 7% total graphitic carbon and provides attractive returns as it is, the recent drill results at Razafy Northwest, as outlined on this slide, of 16 to 19% over very wide intervals is a significant game changer for the company. On top of this, Razafy Northwest is open north, south, east and at depth, and will be the subject of more exploration later. Taking into account the rather long delays we're all experiencing in laboratories and receipt of the final assays of our program, our aim is to put out a new resource for the MANIRY project in Q4 this year to reflect these higher grades. This slide brings us back to project sensitivities, and as I stated earlier, the importance of both grade and price. Although early days, the grades we released to the market last week clearly demonstrate the potential to increase both the NPV and IRR substantially, with the addition of Razafy Northwest material to our resource inventory. With a baseline fully diluted mined feed grade of 6.2%, it really wouldn't take much to increase our financial returns by 100% or even more. In order to realise high margins, you need to demonstrate that you have the quality. In our case, all three of our key target areas have demonstrated quality acceptance. Tier 1 end users have qualified our samples as being of high suitability to their needs. Along with that, we have spent considerable time and effort having independent European laboratories test our material and state in their findings that our material meets the most stringent requirements for use in the production of both expandable graphite and lithium-ion batteries. So we know we have the quality, we know we have the quantity, so for us it's game on. This slide represents fundamentally a pictorial summary of our graphite business. The mining life of mine strip ratio is 0.9 to 1 and would be envious to have in any commodity. But over the first few years is more like 0.3 to 1. 500,000 tonne processing in stage 1, and one of the major or key issues here is the fact that being small, it can be modularised, so it decreases construction time and construction risk, but it still allows us at 30,000 tonne per annum of concentrate to be a material producer in a global sense. I've gone through the various products that we're looking at in terms of the lithium-ion battery market, refractory materials, flame retardant materials via our expandable plans, etc. But suffice to say, the revenue obviously increases the cost of the material as long as it's suitable. And in our case, it'll take something that would get maybe the best part of $1,400 a tonne on the coarse material. For a few dollars more, it takes it to about $2,800 to $3,000 a tonne. Add a few more dollars, which will be the next stage that we'll be looking at, and create graphite foil, and you're probably looking at something closer to $9,000 a tonne. So the leverage is there in terms of value adding. So in terms of expandable graphite, the production of expandable graphite makes infinite sense to us at BlackEarth. As I said, take a product which is decreasing in global supply, produce a downstream high demand product for a few $100s and realise a significant increase in margin for shareholders given the current sale price and what it could do in the future. Working with the right people and the right know-how will see us enter a low risk, low capex opportunity with a plan to be in cash flow within 12 months. When I say low capex, our stage 1 development, which is plus or minus 2,500 tonne a year of expandable graphite, will cost the whole joint venture no more than about $3 million US. Whilst we will initially buy feed on market, the plan is to substitute the market-bought coarse flake feed with our own material once the MANIRY project is up and running in 2023. The quote to the right by the independent German laboratory NGS states, "We could not find any restriction which would limit the application of this kind of flake graphite." Now that sort of comment reinforces confidence in the team at BlackEarth to pursue its downstream strategy in expandable graphite. It also must provide potential debt financiers of MANIRY graphite project confidence when a downstream end user with production in place is the 100% owner of the mining asset in question. This graph, sourced from George Liu, which is one of the world's largest graphite trading companies based in Europe, has the MANIRY graphite test results overlaid over industry requirements. The BlackEarth results derived from test work undertaken by a global leader in the production of expandable graphite demonstrates how good the MANIRY material really is compared to industry standards. While we haven't tested our very fine material nor our very coarse material as yet, given the test results attained to date, we remain confident that the quality would be seen in both these size fractions anyway. What this graph also demonstrates is the vast majority of the MANIRY graphite could be used in the broader expandables industry, negating our need to pursue more competitive markets. In effect, it gives us more market options. This graph produced by Benchmark Minerals Intelligence shows the demand for expandable graphite increasing by over 80% over the next 9 years to 2030 and a further 50% over the following 10 years to 2040. All this while global supply is decreasing. One could say it's a perfect storm that's being formed, and BlackEarth has full intentions of taking advantage of this situation. And finally, NEWSFLOW. Over the next 3 to 4 months, progressive updates will be given on the DFS. And in fact, yesterday we made the announcement about the appointment of CPC as our engineers to oversee the feasibility study and conclude it by second quarter next year. We'll get further exploration results out of our high-grade area of Razafy Northwest. The expandable graphite plan we intend concluding that agreement shortly, and then we'll undertake an engineering and cost study, effectively a DFS on that project, which should take no more than about 8 to 10 weeks. Based on the results we're getting out of Razafy Northwest, we'll upgrade our resource and we'll put that out in quarter 4 this year. Also in quarter 4, we'll be looking at the commencement of construction of the joint venture expandable facility, and that should be completed and be in cash flow, as I said, this time next year. And finally, we'll be putting out various ESG-related activities. Those activities are very important to the company. It's starting with an audit, and we're pleasantly surprised in some respect about the work that we've done to date complying with ESG requirements. We've spent a lot of time and a lot of effort at every level on the environmental side, socially and at governance levels. Socially, Madagascar, the southern part of Madagascar, is suffering a massive famine at the moment, and we're supporting them with food parcels, with new water pumps, etc. But our plan is to get stuck in there and provide them with a longer term future living in that area. Thanks very much for your time.